Welcome traders. Today I will start with the standard disclaimer that I am not a SEBI registered analyst and all the analysis which I share here is only for educational purpose and this is not absolutely no means this is a trading advice. So please consult a SEBI registered financial advisor for your trading and investment journey. Having this in mind, let's start with today's market analysis. Today's video will be longer in duration and full of learning. So, I am an Iliad analyst. So, to understand the context of my analysis, let's start with the basic principles of Iliad waves. See, in Iliad waves, any impulse or an uptrend, which you say in standard technical analysis, any uptrend or impulse is of 5 waves. Okay, so it consists of a 5-wave advance 1, 2, 3, 4, and 5, and after the 5-wave advance, an imminent ABC correction must follow, and then it will advance again in 5 waves. Okay, so this is the standard Iliad wave structure that we are analyzing, and it works beautifully in markets that you have already observed. Now, there are some rules which you can find in any books on Iliad waves, that wave 3 is the most strongest wave. This is wave 3, and we mark it as this. We mark it as 1, 2, 3, 4, and 5. Then an ABC correction, A, B, and C. So this is the complete Iliad wave cycle, 1, 2, 3, 4, 5, and ABC. And this structure repeats and repeats in the future. Okay. Having this in mind, the general rule is wave 2 cannot trade below the starting point of wave 1. Wave 3 is the most strongest wave, and wave 4 never trade in the wave 1 territory. So if you want to trade wave 5, then the stop loss you must consider is the high of wave 1, because wave 4 cannot come below wave 1. Okay, so see, in this impulsive structure, there are 3 waves that are going in the direction of the trend. These are called motive waves, and for each wave there is a corrective pullback, and these are 2 in number. So 3 and 2 all are Fibonacci numbers, completing a 5-wave move, which is again a Fibonacci number. So impulses come in 5 waves and correction comes in 3 waves. And total 5 plus 3 is 8, again a Fibonacci number. So this cycle or Iliad wave complete cycle is so natural that this corresponds to the natural number series, which is called Fibonacci number series. That's why this is so powerful in the market. So this is our general structure to analyze a market that you should keep in mind. So having this in mind, we'll start analyzing first our Nifty chart for intraday purpose. So here is the hourly chart of Nifty, and see why I am not so much bullish in the market, because everyone is bullish, having some good news is, and structurally Nifty is showing some strength, but I am still not aggressively bullish because of, see, this correction is A, B, C, right? So this is of three-wave move that we have already discussed. So correction comes in three-wave. That's very, very good. Now, if the correction has ended here, then this should be an impulsive up move, right? But see here, if it is 1, it is 2, then wave 3 must be of 5 wave. So this should be 1, 2, 3, 4, and 5. So wave 3 has completed here. So where is wave 5? Since there is no wave 5 clearly visible here, I am skeptical about this. So this is a three-wave move actually, A, B, and 1, 2, 3, 4, 5, C. For this reason, I am not specifically highly bullish in the market till now. So this is the larger time frame view, and what it may create different things. See, this is again a three-wave move. So everything is moving in three-wave, and again from here, see, when this bottom has formed, this is wave 1. See, 1, 2, 3, 4, 5. If you mark it as this way, I have remarked it. But if you mark, see this one. Sorry. See, this is our general structure that we are discussing in our previous video. See, we have marked this as 1, 2, 3. Let me remove this. This is 3. So 4. As per our rule, 4 cannot trade in wave 1 territory. But see, wave 4 bottom has entered wave 1 territory. Right? You can see it. Okay. So that's why I am again marking it as A, B, C till now. But it may happen that wave 3 is extending. So it may happen that this is 1, this is 2, this is 1 of 3, this is 2 of 3, and 3 of 3 in progress. This may happen. Okay. So for that reason, I have told you in our previous video that these low should not be taken out. So these low must be protected by the bulls. So anyone is positionally long in the market must keep stop loss here. Right. So having these in mind, let's analyze the upcoming probability of the market. What market can offer us? See, market can offer us this thing. Since this is a three-wave move, so I am considering is everything is three-wave. So market can give an upside move so that this is three-wave move, this is three-wave move, and another five-wave downside may follow. So in that case, this is a complex correction which may create a bull trap and drag down the market brutally downside. So for this reason, one should not be highly aggressively bullish in this market. Obviously, I will give you certain levels which will invalidate this skepticism. So for that reason, see, let's come back. So this is your, if you are long, then this is the first resistance zone, 26,168 to 26,284. That's it. You can say 26,150 to 26,300. This is our first resistance area. If price breaks this out in fast nature, then the second resistance area is 26,431 to 26,509. This is another important resistance. And finally, if this also holds, if price breaks these with fast nature, then the final resistance zone, I have marked it as 27,173 to 27,011. So keep in mind these levels and please be very, very aggressive in trailing your stop losses, because whenever if these any three resistance works, then the fall will be very fast, so that you will never be able to book your profits, specifically if you are an option trader. Okay, so keeping in mind, and the important dates which are coming in nearest future is 20th November to 21st November. This is very important date, time horizon, and final very important date is 26th of November. Okay, plus minus 1 day you can take, so that I am expecting probable time zone to achieve this price target. If price rejects from these area in this time zone, then there may be a very, very big fall in the market, which may drag index to this level. Okay, so keep this in mind. So be very careful in your long position. Okay, so this is for the index, and also see the Bank Nifty. In Bank Nifty, this is 1, 2, 3, 4, and 5 is in progress. So what is the possible resistance zone in wave 5? For the wave 5 is this 60,278 to 61,400. So this is the zone from where this complete, see, we have told you that a complete Elliott wave impulse, it completes 1, 2, 3, 4, 5, then an ABC correction must follow. So in that case, both the indexes will be aligned and it will drag down the price. You will get lower prices. So be careful in the markets. Today, what I'm going to show you some important indexes which you need to track for your investment purpose, because almost everyone today, in today's situation, everyone is doing SIP in mutual funds, and for that reason you should always keep in track in which sector you should invest your hard-earned money or a safe return, and when you need to be cautious. Okay, because everyone is very, very aggressively long and investing their hard-earned money in the market aggressively, but you always need to be careful when to get aggressive or when to get defensive or when to quit from the market, because this is the most beautiful thing which one should learn. Okay, so having these in mind, let's start with everyone's favorite IT index. So in Nifty IT, if we see in larger frame, okay, in larger frame, this is wave 1. So let's mark it. This is wave 1. This is 2. This is 3, 4, and 5. So IT index, as per my analysis or as per relative theory, has topped out. Okay, and hence there is no buying you can see in the IT index, and IT stocks are lagging very, very much. And the main reason in this case, let's come back to the lower frame, what IT index is behaving, which can give us clue for Nifty. Okay, because IT index carries big weightage in our Nifty index. Okay, now see here, we have already discussed that these corrections follows ABC pattern, right? Say ABC, every correction is of 3 way. So in that case, see, this is 1, 2, 3, 4, 5, completing the first leg of the correction. Hence, we have marked it as wave A. Then these are all corrective bounces. So this may be wave B as a triangle and C has started. It may have started, or wave B may go as A, B, C. Okay, it is in flat. So wave B may go as A, B, C for another high and then create a bull trap for the wave C. So the conclusion is, I am not advising you to do SIP or mutual funds concerning IT index. Is not advisable because in weekly frame or in higher frame, we are in a bigger decline. So that you will not get your returns from the C. Fine. So in that case, if IT index moves one more high, these are the resistance areas that you may note down. If price rejects from these resistance area, then Nifty will make a smaller high and then fall back. So take your trading decision accordingly. So this is for the IT index. Next, move on to metals. See the Nifty metal index. In metal index, this is wave 1, this is 2, 1, 2, 3, 4, and 5 completes wave 3. This decline is in wave 4 and wave 5 is in progress. So the resistance area for wave 5 is marked here 11,055, 12,082, and finally 13,159. And this is the most strongest resistance, 12,082. So again, you see that we are in the final leg of the euphoria, right? And see, we have already noted that after 1, 2, 3, 4, 5, a bigger A, B, C decline will follow. So this is the best area to invest in SIP mode. Okay. So this is the best area to book your profits. That Elliott wave teaches us. Okay. So this is the metal index. Next, this is auto index. See this in weekly frame. This is 1, 2, 3, 4, and 5 complete. So wave 1, wave 2, and auto index is in wave 3. And wave 3 will be again in 5 wave. So this is wave 1 of 3, 2 of 3, 3 of 3 has done, 4 done, and 5 is in progress. So these wave 3 may end in this zone 30,847 to 33,605, and is trading at 27,250 level. So auto index, again, just one more high may come and then it may fall down again with an ABC correction. So see, you may have already observed that what decision you should take. Next, pharma index. For pharma, see, this is wave 1, wave 2, wave 3, wave 4, and we are in last wave of the pharma index. So this is 1, 2, 3, 4, and 5 that will complete the pharma index. So again, since we are in wave 5 is meant for profit booking, because after wave 5, a bigger ABC will come and this will destroy your capital very badly. Fine. And now let's move on to say small cap, because everyone loves small caps. let's see the status of small caps. So here small cap index, here see this is wave 1, A, B, C, very big complex correction. This is wave 2 and we are in wave 3. So that's why you may have observed that some good small cap companies are performing really well. Okay. See, this is in wave 3. Wave 3 must be a 5 wave. So wave 1, 2, 3 is done, 4 and 5th of wave 3 is in progress. Okay, so in small cap, there is some still some opportunities to invest in C bond so that you can generate some good return. Fine. Next, see Nifty Realty Index. See, in Realty Index, you must follow this very important north-north cycle. That is 18.6 years north-north cycle. This is very important business cycle. And see, in 2008, you may already notice that the land valuation were in the highest level. And after that, in this zone, that is 2013 to 2016, land valuation has came down where many people invested in lands and they are generating some good return. Now, this 18.6 year cycle is ending in July 2026. So this is a very important time period, and see how the price structure is behaving here. So this is again a motive wave, but this is a corrective motive wave. So this is, see, this is only 3 wave move, that is ABC completes wave A, wave B, and wave C is in 5 wave. So this is 1, 2, 3, 4, and 5 is coming here in this zone. 5, the wave 5 must end so that an ABC will complete, and again another decline will follow. So this is a very important resistance zone, and this is very important time zone which you can study for your research. Okay, so having these, and finally, let's look at Sensex. So here, see Sensex, this is wave 1, this is wave 2, and 1, 2, 3, 4, COVID crash, and 5 completing wave 3, wave 4, and wave 5 is in progress. So we are in wave 5, that is the final leg of the euphoria. So again, we need to be cautious in large caps, because you may have observed that in large cap mutual funds, they are really lagging in returns because of these, because profit booking is happening. Okay, everyone is getting, the big money is getting out from the large caps, and who suffers? Only retail traders suffers. So this is very important, and you should be smart in your investment journey, otherwise you will always be on the loser's end. That's it. We have analyzed so many sectors where you can invest or you can exit according to my Elliott wave analysis. If you want different studies or different sectors to be analyzed in this video, in the upcoming videos, then you can comment your requirements in the comment section, and I will analyze it for you. So again, thank you, be safe, and don't be too much excited in the market.